I think there is no Latvian, Lithuanian or Estonian businesses being listed on London Stock Exchange.
The number of IPOs has decreased substantially since 2021.
Because the listing is the biggest cost and the biggest resource.
You are going to bring costs with you on the journey as you list. You only need a market cap of about 30 million. If you were to come to London, you'd consider both options.
Second episode, BDO Talks, this time BDO Latvia Talks with Ryan. My name is Raivis, and I have Ryan here for the second time in Riga, for the second time attending the Baltic Capital Markets Conference.
Right. Yes.
I think you came 2 years ago for the
3 years
first
ago.
time.
2022 was my first time here, so pleasure to be back.
Good to have you, and thanks for coming down once again. How was it this time comparing to the last time? Because we see it locally that the conference, I think, has evolved quite a bit. So since you had a bit of a gap from visiting us in the conference, how was it this year?
My first trip was coming out of COVID. So there was optimism in the room, and there was optimism that the markets would be busier. And then I suppose that probably dissipated quite quickly after the COVID situation. But this year's event was bigger, better than last year's event. There was more people, over 500 people yesterday, was at the conference.
Yeah, the record.
The record. We had the Prime Minister came and spoke, along with various politicians locally. So it is getting the local recognition and support, which the local capital markets need to thrive and be successful. A great event, great opportunity to meet corporates. So this time they had corporates doing their own case studies and presentations alongside the main conference. So you got to meet real world businesses, and then you also got to meet advisors, banks, people ingrained in the Baltic state community.
Yeah. And it goes together with what you are doing on a daily basis, right? So you on a daily basis are doing the capital market transactions in UK in your capacity, and you are also heading the maritime division.
That's correct, yes. So BDO in London is a substantial firm now. I think we're over 5,000 people in London, over 8,000 across the whole UK. And we focus on mid-market entrepreneurial businesses, similar to here in Latvia. And we're quite steadfast in that strategic vision. Yes, we do work for larger public companies and corporates, but I think our sweet spot is that mid-market entrepreneurial clients that wants to grow and be successful. So my job, I'm a director in what we call the transaction services team at BDO, which sits as part of the corporate finance team. And I specialize in effectively two areas. First is the capital markets. So companies looking to list in London, they require what we call a reporting accountant if you're going to list locally. And BDO UK provide that role. And so we truly accept businesses from all different jurisdictions. And my focus is predominantly on international businesses that are looking to come to London. And then my other hat is the maritime, as you mentioned. So from a sector perspective, and it's not particularly aligned to capital markets, but anything that's maritime orientated that has an advisory perspective at BDO, I normally get involved and try and help those transactions or general advice happen.
Based on my local knowledge and also what was discussed yesterday, then currently I think there is no Latvian, Lithuanian or Estonian businesses being listed in London Stock Exchange, and as far as I know, there's no one maybe trying to have that jump, as it's always foreseen that, first you do it here. That was also discussed quite a bit, and there was some Swedish guys arguing their positions. How would you say whether that is possible, or whether that's maybe a misconception that you have to be, I don't know, this big and we are maybe not that big, and whether that would be a way to go, for example, rather than doing it locally in the local market? There was also dual listings navigated and discussed quite a bit yesterday, advocating in favor of those, mostly from the consulting perspective. What do you think about the local businesses here trying to take that step? Would that be possible, and would that be interesting to the seemingly one of the biggest capital markets in the entire world.
Yes, so I think it's fair to say that the London market has had recent challenges, but that is not different than most other capital markets. The number of IPOs has decreased substantially since 2021, but it's not right to say that there's no Baltic companies on the London Stock Exchange.
Okay.
We have Ignitis, which is the Lithuanian energy company. They have a listing in the UK. We also have a company called Baltic Classifieds, which is also listed in London, and that's been a great success story in London, and sort of shows what's possible for international business, particularly one that's focused on the Baltics. And I think there is a misconception, like you mentioned, in terms of the size criteria that you need to be to necessarily be listed. So in the UK, there's effectively now two capital markets. You've got the London main market, and you've got the AIM market, which is for smaller growth stocks. And the rules and the hurdles have been sort of slowly lowered over the past few years to make it more attractive to companies to come and list in London. So for the main market, yes, there are multi-billion-dollar companies on the main market, but the size criteria is actually relatively low. You only need a market cap of about 30 million to list on the main market.
Okay.
So yes, it costs money to list on the main market, and you probably need to be of a certain scale to justify it, but you certainly don't need to be a multi-billion-dollar company. And if you want exposure to institutional money, you have a equity story that justifies a listing in London, then there's no reason why a Latvian business or any company from the Baltic states shouldn't be considering a London listing. Now, yes, it might be better to have tested the waters to some respect locally and got local support. And a dual listing, as we discussed yesterday, is an option if you could list locally here and in the UK. But my sense of that is it's relatively rare, and if anything, you're probably going to be introducing additional costs if you list in two jurisdictions. So if you have a good enough growth story, there's no reason why you can't just directly list in London. And I think part of the challenge is locally is convincing the institutional investors of the scale of the opportunity. And so it really depends on the type of business here. But if you've got one that is focused on growth, focused on profitability and operational improvement, and one that can truly grow and become international, that will be really appreciated by the London investment community.
Okay. And maybe if you're already in the London market or looking to expand there, then that could be a part of the growth story, I guess, as well. That there potentially would be some exposure.
Yeah, it goes both ways. So people, it was nice to see optimism in the room yesterday. So the Latvian market and Baltic states is a great buy and build. If maybe you have a presence in Europe, in London, but you want to expand geographies, and so here you've got three countries effectively, which are very aligned to each other, have common heritage and history. And, if you're going to launch in any jurisdiction, you might as well launch in all three.
True. Yeah, for some reason we haven't had many interest to go there, but as you said, it's probably a misconception, and there are several success stories. Of course, Ignitis was the largest listing in the Baltics, I think, ever, if I'm not mistaken, but hopefully some others after yesterday's good there
was plenty of appetite from the Stockholm Stock Exchange yesterday. Who was trying to convince everyone that Sweden was the right market, but I'll have to disagree and say it's London that's a better choice. Deeper pools of capital, but Sweden is an active market and has been doing very well recently.
Okay. You did also mention that there is the main market and then there is this AIM market. What is maybe the difference, and what is normally the decision in between whether you go for the main one? Is it also just a better story, bigger size, or it's sort of circumstance based? Or
well, it's quite interesting at the moment because what's recently happened is the main market used to consist of two markets, and they've been consolidated into one. And then the rules have been revisited associated with the main market to, like I say, sort of lower the benchmark slightly so that more businesses can list more effectively and more efficiently on the main market. AIM is at the moment just revising its rules. So at the moment, you've effectively got the main market, which has reduced its rules to be
closer
more
to
user friendly, but it's come in line with AIM. So AIM is now revisiting its requirements to slowly move its benchmark down again. But it's all about increasing the supply side of businesses. So the regulator acknowledges that listing on the UK market is expensive. There's bureaucracy. There's it takes time, resource, funding to produce all the governance and documents that's necessary to be a listed business. And so there's a concerted effort to try and reduce that. And if you're looking to come to the London, like you said, there's two options. You can come to the AIM market or you can come to the main market. If you go on AIM, there's no chance you'll be classified in the FTSE indices. And there's probably slightly lower levels of liquidity in the AIM market versus the main market. And I think the main market's focus is probably on more established, larger businesses. So they would find it more comfortable to be on that market. Whereas the AIM market, whilst it does have some very large companies on it, it's more focused on growth businesses. It has an investment community which is more open to risk effectively and will take a view on a listing to support it and raise money. And so AIM's slightly different in terms of its regulation as well. You have people called nominated advisors, who it's their responsibility to regulate the market effectively, rather than the FCA, which is more of a regulatory body for the main market. But fundamentally, if you were to come to London, you'd consider both options.
And then
you would speak to your reporting accountant like BDO, or you'd speak to your investment banks, and we could provide guidance on what market is right for you.
Okay. So in a nutshell, what you are doing, you are developing the story and evaluating both of the markets and the path for international businesses who want to go there, and then you find the best fit for
exactly.
the
and you don't necessarily need to make a decision on day one. You can do the groundwork, set the foundations, and then once you're ready to hit the ground with the IPO process, then you can decide, yes, we're AIM, yes, we're main market. I've worked with businesses that have been undecided up until quite late in the process, and then they've decided on, okay, we'll do the main market.
Okay. I bet there are many readiness assessment points and the things that you have to do. What about the ESG? It has been a very big discussion point locally, a bit also yesterday in the Capital Markets Conference. Now that at least the European Union has raised a bit the bar, so less and less companies are in this mandatory scope. But would you say that is still a big advantage or disadvantage, and how the ESG reports and this greenwashing issue that is being discussed, whether that's also something that you should be prepared to answer as a new market participant?
Yes. Well, there's no doubt that you need to be prepared to answer your story when it comes to sustainability and ESG. What we do at BDO is we encourage companies before they list to do an IPO readiness assessment, and this is effectively a gap analysis to identify what do you need to do in order to not only list, there's the bar, which is the minimum requirements, but what do you need to do to stand out and look good? And yes, obviously you need your audited financial statements. You need to be able to have good governance and controls. But what's really important with investors is to understand the equity story, and that typically involves an angle which is the ESG and sustainability footprint of the business. Now, yes, I think it's fair to say there has been a bit of a pushback from the standards that were being set a couple of years ago in respect of ESG, and there's less focus on it possibly now. It's sort of slightly moved down the agenda at board meetings. But that said, it's still on the agenda
But
of
it's
board
still there.
meetings.
You
It's
cannot
still there. You can't
abandon
avoid it. And it's only going to remain more and more irrelevant as we move further in time. There is still a need to move towards net zero. I think businesses just have to be commercially sensible about the level of ESG disclosure, due diligence. What matters for them. You have to consider all component parts of ESG. And yes, there are relatively limited ESG requirements for companies that are looking to list. So yes, you do need to do your carbon reporting. But like you said, the EU has sort of stepped back slightly in terms of the criteria that's needed. And so there's a bit of a watch and see mentality, I think, with ESG. So what we actively discourage is sort of box ticking exercises, doing it for the sake of it. I think that's not the right way to approach it.
Just making a report and
just making a report for the sake of it. That doesn't help anyone. So I think focus on your own business. You know what matters to your business, and if you can make positive steps in the right direction with your ethical and ESG compass, do it, because you're only going to get remunerated for it in the long run.
Okay. And speaking about the long run, once you are listed and once you are meeting the minimum, you have the story and you have everything, and now you are on the market, what are the main, maybe key difficulties or challenges that the companies are then encountering? Because I have also heard yesterday from the participants that even here, once you list on the main market, which is the regulated, because here we have the main and sort of the first north or the secondary, where also the requirements are much less, but then you need to produce some quarterly reporting, which maybe you do for the first time, then maybe it needs to be audited, then it's additional cost and additional financial resources needed also from the company side. Maybe you need the IFRS, or in your case, maybe UK GAAP financial statements as a mandatory one. So maybe what is the sort of the ongoing needs that you think that clients should be aware of once after they list? Because the listing is the biggest cost and the biggest resource, but then once, in order just to, in a sense, keep going and stay there and hopefully do well.
Yes, well, the IPO isn't an end of a journey.
Exactly.
It's a stepping stone on the journey of any business as it moves from perhaps a entrepreneurial family business into the more corporate world. And yes, there are lots of hoops to jump through when you're IPOing to check you're an appropriate business. So that is getting audited from someone like BDO. Typically, you'll have to produce your financial statement in IFRS.
IFRS is fine for UK capital.
It's encouraged.
That's good to know.
Widely adopted.
Okay.
And UK GAAP, in fact, is coming it's almost aligned to IFRS now anyway. So, but IFRS is fundamentally what you need.
That's good to know.
In terms of once you're listing, the reporting requirements do exist, but in my view, they're not particularly onerous. So there's no quarterly reporting unless you want to do it.
Okay.
So you have to produce your annual interims. So your 6 months, but they don't necessarily have to be audited. Again, you can choose to audit them if you wanted to.
Okay, but that's not a strict
But it's not a strict requirement.
Okay.
But you do have to produce your obviously annual audited financial statements. You do have to keep the market obviously updated on information that's relevant, price sensitive information about the business. But yeah, there is an additional cost that probably is best aligned to sort of corporate governance and control. So you do need to strengthen your board of directors. That might be by bringing in independent non-executives. Could be by bringing in new executive directors as well, people who are familiar with the capital markets. And then you'll often have advisors that will support you as a listed business, telling you how best to update the market, how to position your equity story on an ongoing basis. Because one of the great successes of the London capital market is the ability to secondary fundraise. So yes, you IPO and you might raise money, you might not. But fundamentally, once you're listed, you have access to a deep pool of capital. So if you deliver on your equity story once you IPO, in a year, 2 years' time, you can raise money again because you've got that pool of capital that you can access. So yes, I think you're right to be slightly cautious of you are going to bring costs with you on the journey as you list.
Mm-hmm.
But hopefully those benefits that I've just mentioned
Yeah.
outweigh the costs.
Oh, definitely, and it actually seems to be a bit similar with the local requirements for the listed ones. That you also have to produce some interim or quarterly reportings. No need to be audited. So actually, and if the IFRS financial statements are actually fitting fitting the game plan there, then you actually don't need necessarily convert. So what I'm hearing is that it's not maybe that substantially different as we maybe here think that. I mean, in order to do it, you have to, I don't know, flip your company 180 or something like that.
No, and I think that would be actively discouraged. Like, if you're suddenly changing your business to meet certain criteria, it's probably not right for you.
Exactly.
I think it needs to support what you're doing already.
Mm-hmm.
And like you said, IFRS financial statements absolutely fine. We're not necessarily asking businesses to change what they do, but it's just improving things. So as part of an IPO, you'll do something called a financial position and prospects procedures review, which is looking at your internal controls, how you report your financial information, what governance systems you have. So it's a bit like an internal audit, but it's more wholesome than that. And with that process, you identify how can we improve, what authorization limits do we need, what controls do we need to make sure this business is not at risk of getting its financials wrong once we're IPO'd.
Okay.
So these are all good things that any business should be considering fundamentally, but it's just a good stepping stone on the IPO journey.
It's a good, I guess, also self-assessment just for the company and for the owners to see where I actually stand. So the process itself is not only maybe about the listing, but also helping to strengthen the brand position and some other parts of it. As it was also discussed yesterday, that, I mean, once you're public, it means that you are public with everything you do, and that brings some challenges. But ultimately, if you're ready for that and you have, as you said, a good board directors, maybe onboard someone independent or someone with some more deeper knowledge, then you can actually, I guess, also improve on the share price once you are there.
Yes. So I think having a clean business that's transparent is part of the process you go on when you're becoming a listed business. And so when you do list, you have to be prepared to let your business be interrogated by financial due diligence, tax due diligence, legal due diligence. So any skeletons in the closet are quickly found out and come out. And the point there is these things are resolved. They're mediated in some way, and companies manage them appropriately. And that's all about just making sure the most appropriate businesses list on the stock exchange. We don't want investors to invest and then 6 months later there to be some finding that there's a big tax liability due that no one knew about. So you go through that process of identifying what is the business, what are the risks here. But all this is set up to just make sure that the business is appropriate and understood better by investors. So I think if you're coming at it with a mindset of I don't want to disclose, I don't want to be public, I like to be privately owned and control my business, I think capital markets are probably not for you. And I think that's part of the challenge with local businesses. That my understanding from yesterday is that there is that owner entrepreneur mindset where disclosures not up front and center necessarily. Transparency's not something that's necessarily done. And so I think there's a cultural shift that possibly needs to change with certain businesses in order for them to open themselves up to institutional capital, international growth. But like I said, that'll take a mindset shift. One thing from yesterday I thought was a shift from my last attendance was there was the talk about privatization of state-owned companies coming to list. And that was the same messaging in 2022. But what's changed this time is that there was active dialogue with politicians around partially listing these businesses. So yes, keeping an existing state control but listing a small portion of it on the stock
Yeah,
exchange.
like 20%-ish or something.
As a stepping stone to then maybe a larger. And I think that would be great if we get a few businesses that are state-owned, are substantial, have the growth prospects and sustainable earnings. It's going to only boost the local capital market environment.
Would you say that would be a potential also for dual listing in UK?
Certainly.
Despite the fact that they are maybe more localish, not all of them, but I mean the main market is the Latvian or the Baltic market. Would that still be interesting for the investors in UK, in your opinion?
My expectation is yes, because Latvia and the Baltic states are viewed less these days as a frontier sort of emerging market. It's as we can see with the development outside here, there's growth, there's opportunity here, and it's a growing market. You're members of the EU, which gives people that sort of rubber stamp of approval, and there's obviously, I think, also a misconception around the extent of Russian connections. You don't necessarily see that on the ground when we're here. Yeah. There's a proud national Latvian community here of strong businesses, and that's something that is only going to benefit from capital market exposure.
There's also a lot of discussion, as you correctly said. In 2022 we were discussing the state-owned companies. In 2025 most likely, now the elections are coming, we would be continuing that discussion as well. And seemingly they are in a sense a bit on the clock, and also the Minister of Finance says that, I mean, it is his commitment to sort of push this agenda and to have at least the first one, and then hopefully others will follow. What is the timeline that you see in order to get it all together, to do this readiness assessment and to list? Is it, I don't know, a couple of year project? Can you do it quicker? What is your...
So if you're new to thinking about an IPO, whether it's right for you, I'd certainly suggest you probably undertake a readiness assessment, and that's probably about 12 months out from your targeted IPO date, and that will seek to identify where you have big gaps. So if you suddenly identify that we need to change something about the business, you then take the time to change the business and get it right. But that said, if you are steadfast on listing, you've already ticked a lot of the boxes, you've got your financial statements audited, your growth story, you're ready to go, and you have a business plan, then the shortest I've ever seen sort of someone go from that to listing is probably 3 to 4 months.
Okay, that's quick.
So you can do it pretty quickly if you have that drive and ambition, and you should seek to do it quickly to try and mitigate the costs associated with it. But I think if I have to take an average time, it was probably 4 to 6 months in terms of when you start the process until when you're finally listed on the stock exchange. So it is a long process. It does take quite a lot of management time and resource. And that's one of the challenges. You still need to do the day job whilst you're dealing with all the documentation that's required for an IPO. So that can be challenging, and often businesses underestimate the time it takes their finance directors and CFOs to deliver what's needed for an IPO. And that's why we always recommend getting support, bringing in consultants, bringing in advisors who are very experienced. And we see it at BDO, we are more active than anyone else in the UK capital markets. We've seen more transactions than anyone else. And so it's pretty clear when we come across advisors on transactions who haven't got that experience, they are naive. And, whilst there is a cost associated, and you might be trying to save money here and there on an advisor, but in the long run, it's certainly not worth it, because it ends up costing you more. So exactly. I would recommend obviously choosing experienced advisors as and when you do any transaction, not just capital markets.
Then would you say that the biggest actually maybe cost, or in a sense a misconception, is that, you can, for example, onboard you and your team, but the management still needs to be quite a bit of engaged. You cannot just say, hey, now we have consultant X and they will do all the job, they will do the listing for us. Would you say that sometimes occurs in in the
Yeah,
process
no.
that I mean the management is no, or maybe only the CFO, because I think what we have locally saw and what we are seeing that the companies who are doing that, I mean, if the whole management is committed and if they know what it's about, and also there's sometimes maybe a question of this financial literacy, that I mean, to understand really the process. And if you pay quite a bit of time, and if that's part of your strategy, I guess, as well, then it's a bit easier, because I guess the time dedicated to the whole process and also to discussions with you, for example, I mean, it takes some time, and it should be a priority, right? Because you have
Yes,
some other things on the side as well.
So I think that's right. Financial literacy was brought up quite a number of times yesterday. And that's, yes, it's about the wider population being more aware of investing in IPOs. But you're right, it's about management teams as well, understanding what the process is. Most businesses that IPO, their management teams won't have gone through an IPO before. It's going to be new to them, and that's completely understood and natural. But there needs to be an education, a bit of a learning to understand what's required. And yes, I think you can bring in support from advisors or a consultant that has done it before. Great idea. That will support you through the process. But it certainly shouldn't just be the responsibility of the CFO to list the business. Yes, they're going to be at the core of the IPO process, but everyone needs to be involved. Everyone needs to be singing from the same hymn sheet. When you're going to investors, you need to go to investors as a board. You can't just send the CFO to pitch to investors. You need to go there as a board, and you need to buy into why you're doing this. Investors are pretty savvy. They'll ask difficult questions, and if you're not doing it for the right reasons, you'll be found out pretty quickly.
You spoke with quite a bit of businesses yesterday, also during the conference. Were there some that you think have the potential, maybe without mentioning the names, to go there, or maybe that you saw the ambition in the people's eyes about seeing that? I mean, it's not maybe as the same as going to the space as going to the London Stock Exchange, as maybe some are thinking.
Well, there was some great fintech businesses that I saw yesterday that had big growth aspirations. Estonia is particularly known for its technology environment. Great companies like Bolt and companies are already listed in London, like Wise, who obviously has a Estonian founder. And so, yes, there was loads of great businesses that I saw, and it was just really nice to dispel some of these myths around the UK capital markets. I think, yes, there's negative sentiment out there because of the lack of IPO activity recently. But that said, we've had a recent flurry of listings in London. I think there was 4 or so last month, and the pipeline's getting busier and busier. And I'm optimistic that hopefully we see some sustainable growth in IPOs over the next 12 months. Because what we don't want is the sort of boom and bust nature of capital markets, because it doesn't help foster a strong investment environment. But if we can see more international businesses, stable businesses that are transparent, London is an international market, and it will be looking for international businesses such as those in the Baltic states to come and consider listing. So yeah, I thought it was a great event, really well organised. Great of BDO to be sponsoring and supporting Latvian and Baltic capital market environment, and it was actually a pleasure to be there. So thank you.
It's also great having you for the second time. The date for the next year is also set, so hopefully you will visit again, and I also hope that we would be having some interesting projects together in near time. So hopefully also for the listeners of ours, you maybe moved a bit some misconceptions about how hard it is to do that, as it seems, maybe to a bit summarize, that it's actually not that hard as long as you have the right people on board and you have the right consultants, because I guess that is the way to do it, because it's a big market and there are some nuances, and it is different in a sense that some of the regulation is different, yet I think we also found that there are quite a bit of similarities to actually doing that here in the Baltic states, or some dentists we know who did it in Frankfurt as well. So it is doable. Right. I think that's the main. It's doable.
And we are open. We're an open door. You can come to you, speak about London, speak about capital markets, be inquisitive, have those questions. We're happy to tell you if you're appropriate as a business to list or not. Let's keep those communication doors open.
Definitely.
And we can support businesses. And BDO, obviously, we focus on mid-market entrepreneurial businesses. So we're really well positioned for those ambitious founders who want to list their businesses on capital markets.
Well, I thank you, Ryan, for your time. Thank you for the conversation and the valuable insights, and hope to see you next year. And I think we can close it here. Thank you.
Thank you very much.
Thank you.